So welcome everyone to this classic revision of SAE 3420. First of all, what does this standard talks about? It talks about the assurance engagement. Assurance engagements to report on compilation of PFFI. What is a PFFI? That is a pro forma financial information. This is included in the prospectus of a company. Now, sir, how do we remember this is SAE 3420? All the SAE are in the 3000 series. Yes, sir. This is 420. What is 420? Sir, 420 is a fraud. And most of the frauds take place in a prospectus, in a IPO. So just using this technique, you will be able to remember, able to recall that SAE 3420 is related to PFFI included in a prospectus. Now, sir, understand. What is a PFFI? Let's say there is an entity whose audited financial statements are available for financial year 23-24. Financial year 23-24 means 1st April 23 to 31st March 24. So the balance sheet will be dated 31st March 24. P&L will be for the whole financial year, that is 1st April 23 to 31st March 24. Now, after this financial year end, on 1st May 24, it acquired 51% shares of another company. That company becomes its subsidiary. Is it a significant event? Yes, sir. This is a significant event or transaction. Now, on 1st of June 2024, it decided to go public. It decided to go public, matlab, it decided to launch an IPO. Whenever you have to launch an IPO, you have to come out with a prospectus. But as per the SEBI guidelines, if between the year end and the date of IPO, there is a significant event, you need to adjust it. You need to adjust it retrospectively. Oh, you need to adjust it retrospectively. That means you need to assume what would have been the financial statements, what would have been the financial performance if this subsidiary was acquired earlier. So as per SEBI, your financial statements need to be redrafted as if you acquired this subsidiary at the beginning of the last financial year. For example, 1st April 23 for the purpose of P&L. Or you acquired this subsidiary as on 31st March 24. Instead of 1st May 24, you acquired on 31st March 24 for the purpose of balance sheet. So sir, what we are required to do? Just take your normal financial statement. These normal financial statements are called unadjusted financial information. These are called unadjusted financial information. On this unadjusted financial information, you need to perform your adjustments. Adjustment for the significant events. Once you perform the adjustment, you come out with PFFI, that is the prospective financial information. And as a practitioner, you need to prepare a report on this. Got the point? Yes, sir. Now, sir, what is a PFFI? PFFI is nothing but a financial information. This information is shown with the adjustment. Adjustment of what? Adjustments to illustrate the impact. Impact of any significant event or transaction as if the event had occurred or transaction was undertaken at an earlier date. In the example that we discussed was acquisition of the subsidiary. So if you assume that the subsidiary was acquired earlier, what would have been the financial performance? What would have been the financial position? That is what PFFI is called. Got it? Got it, sir. This is used in the prospectus of the company and it can be in the form of balance sheet or P&L along with the relevant notes. Now, sir, what are the objectives of SAE 3420? What is the objective of audit? First of all, to obtain reasonable assurance. Reasonable assurance that the financial statements are free from material misstatements. Once you get that reasonable assurance, you are able to express your opinion. Same thing is written here. Here again, you need to take a reasonable assurance that PFFI has been compiled by the responsible party. It has been compiled by the responsible party. Here the word management is not used. Use the word responsible party. Reasonable assurance that PFFI has been compiled by the responsible party in all material respects as per the FRF. No, as per the applicable criteria. Once you got the reasonable assurance, you can present your report. Report whatever are your findings. ठीक है sir. Now sir, what are the steps of compilation of PFFI? Very easy. You take the financial statement, that is the normal financial statement. These are called what? Unadjusted financial information. Oh, so identify the source of such information. Once you have identified the source, extract it. Come on, extract it. Extract the unadjusted financial information. Once you have extracted the unadjusted information, make the adjustments. Once you have extracted the unadjusted information, make the adjustments. And once you have made the adjustments, properly present and disclose the PFFI. Make sure you are presenting the PFFI with proper disclosure. So these are the 4 points that the responsible party has to consider, that is the management has to consider. First of all, identifying the source, then extracting the unadjusted information, making the adjustment for the events or transaction, and at the end of the day, presenting the PFFI with proper disclosure. Are the 4 points clear? Yes, sir. Just go in a proper chronology. Now, sir, comes the next topic. Again, like all the standards, we divide this standard into 3 parts for our practitioner. That is the engagement acceptance, planning and performing, and last part is reporting. All the stages are very, very easy. First of all, let's talk about precondition. Sir, what are the precondition? In case of audit, what is the precondition? Before audit comes financial statement. Before financial statement comes FRF. That means the FRF is acceptable. Here the word used will be criteria. That means the applicable criteria is suitable. Once you are done with the criteria, then check the source data from where you will extract the financial information. Whether that source data is audited or not audited. If it is audited and reviewed, okay. Plus C, whether there is any modified opinion or emphasis of matter para. That means from the audited financial statement where you are going to extract your balance sheet, you are going to extract your P&L, whether those financial statements are audited. If they are audited, whether they have a modified opinion or EOM para. If they have a modified opinion or EOM para, C, whether you can give the reference in your assurance report to such modification or EOM para. This is the basic thing. Just read and understand. And if it is not audited or reviewed, then sir, then you need to see whether you have sufficient understanding. Whether you have sufficient understanding about the entity and its accounting practices. Basic thing, basic thing. Now, sir, if the event or transaction is about the acquisition of an entity and the entity that is being acquired, the financial information of that entity is unaudited. That means the subsidiary's financial information that is to be consolidated, that is unaudited. What to do in that case? Same thing. See whether you have sufficient understanding about that entity and its accounting practices. Same thing, same thing. Just read these points, that's it. Now comes the most important point, that is the agreement with the management. There is a question in the question bank on this. When you are doing the agreement with the management that it acknowledges and understands the responsibility, what will be the responsibilities? First of all, criteria is suitable. Disclose the applicable criteria that is being used by the responsible party. ठीक है sir. Second thing, compiling the PFFI as per that applicable criteria. Both these points are interconnected. Disclosing the criteria, compiling the PFFI as per that criteria. And last may to provide the practitioner with AU. What is AU? All information, additional information, unrestricted access. What was special about unrestricted access here? Unrestricted access to the entity, and in case there is a subsidiary that was acquired, also to the people of this subsidiary. Also to the people of this subsidiary. So unrestricted access not only to the client's entity, but also to the entity that was acquired, the financial information of which is, you can say, adjusted with this entity. Clear? Clear, sir. Now comes the next topic, that is planning and performing the engagement. Very easy topic. First of all, give a brief introduction. What are the basic points that you will cover here? Sir, the criteria should be suitable. Check that as a practitioner. Second thing, you need to determine your materiality. So first of all, 2 basic points. Assess whether the criteria is suitable. Then determine the materiality for planning and performing your procedures. Then comes your procedure, risk assessment procedure, further audit procedure. In the risk assessment procedure, just understand how the responsible party is going to prepare the PFFI. Come on. How the responsible party is going to prepare the PFFI. Then start collecting your evidences. Evidence whether the source is appropriate or not. Then if that source is not appropriate, it is unaudited, what to do? Then be satisfied, again be satisfied whether the source is appropriate or not. Even if it is not audited, again you need to be satisfied whether it is appropriate or not. Once you are sure about the source, check the extraction. Check the appropriateness of the extraction of, sir, extraction of what? Extraction of unadjusted financial information. Now to this unadjusted financial information, there will be the adjustments. Check the adjustments. This point is given in your book. Then after the adjustment, see the presentation. And last point was what? Sir, the last point was very simple. Read the other information with this PFFI to see whether there is any material inconsistency. This point is related to your essay 720. Now comes the last topic of the day, and this topic was about reporting, our favorite topic. When do you give an unmodified opinion? In case of audit, financial statements have been prepared in all material respects as per the FRF. Here, how do you write it? PFFI has been prepared, compiled. PFFI has been compiled in all material respects as per the suitable criteria. Oh. Then, sir, in case of modified opinion, what was new here? You need to see whether modified opinion is allowed or not allowed. If it is not allowed, that means the law regulation doesn't allow. Request the management to make the corrections. If the management doesn't make the correction, then what do? Sir, in that case, either you withdraw from the engagement or take a legal advice, whatever is appropriate. If it is permitted, that means a prospectus with a modified report on PFFI is permitted. In that case, modify your opinion. In that case, you can modify your opinion. Tell me which opinion, whatever is suitable. Disclaimer, adverse or qualified. And remember, in this engagement, what we are taking? Reasonable assurance. Because you are taking a reasonable assurance, always, your unmodified opinion will be positively worded. So at the end of the day, just remember one thing, sir, what? Only person you should try to be better than is the person you were yesterday. So if yesterday you were good, today you need to be better. If today you are better, just again try to better yourself. And one day you will see yourself becoming the best. That's it. Thank you so much everyone for today's participation. After this class, you can go through the question bank. Okay? And in case you have any doubts in the question bank, you can always connect with me on my doubt support number. I hope you enjoyed the session. Thanks a lot for your participation. Have an awesome day ahead. Let's catch up in the next session. Keep going.